Right
Imagine
now,
waking up
as you're
tomorrow to
watching
find
this
out that
video,
your mortgage
thousands
payment
of
is about
Canadian
to
families
increase by
sitting at their kitchen tables,
$1,500 a
staring
month.
at letters
No
from their
warning,
banks, letters
no
telling them their
preparation,
mortgage payments
just
are
a
about to
financial
jump by
gut punch
hundreds,
that completely
sometimes over
reshapes your life.
$1,000
This
a
is
month.
not a hypothetical
These are
scenario
people
for
who made
millions of
reckless
Canadians.
financial decisions.
This is happening right
These
now,
are teachers,
and the Bank of
nurses,
Canada
small
is
business
finally
owners,
being
and
forced to
construction
confront a
workers
crisis
who
they
did
helped
everything
create.
they were told to
For
do.
years,
They saved their
policymakers
down
operated
payments.
under the
They got
assumption that aggressive
pre-approved.
interest rate
They
hikes
bought homes
would
they
tame
thought they could
inflation
afford.
without causing
And now they're
widespread
watching
economic
their
damage.
financial lives
believed
unravel
Canadians
in
could
ways they
absorb the
never
shock.
imagined
They were wrong.
possible.
And now the chickens
The Bank
are
of
coming home to
Canada
roost
is
in
in
ways
full
that
crisis
nobody
mode,
in Ottawa wants
scrambling
to talk
to
about
figure
publicly.
out how to prevent
What we
what
are
could become
witnessing
the
is
worst
nothing short of the
housing-related
largest wealth
financial
transfer
disaster
and financial
this country
squeeze on
has seen in
middle-class homeowners in
generations.
Canadian
And
history,
the clock is ticking
and the central
because
bank
families
is
have
running out of
absolutely no
options to
room left
fix
to
it.
cut.
If you find this
If
topic
you want to
important
understand
and want to
what's
stay
really
informed
happening
about
in
the financial
Canada's
forces
housing
shaping
market
your life,
and why
take
the
a
next
moment
18
right now
months could
to hit that
reshape the
subscribe
entire
button
economy,
and turn on
you're going to
notifications.
want to stay
We
for
break down
this
complex
entire
economic
video.
stories
Before
into
we dive in,
content
if you find
can
this kind of
actually
real,
understand.
honest
And
breakdown
trust
of economic
me,
issues
you are going to
valuable,
want to follow
do me a
how
favor
this
and hit
situation
that subscribe
unfolds
button right
over
now.
the coming months.
We cover
Let me
stories
take
like
you
this
back
every
to
week,
understand how we
breaking
got
down
here,
the complex
because the
financial
current
news that
mortgage
affects your daily
crisis
life.
did not
And I
appear
promise
out
you
of
won't want to
nowhere.
miss what's coming next. And let me
During
take
the
you back to where
pandemic, the
this
Bank of
story
Canada
really
slashed
begins,
interest
because
rates
to
to
understand
historic
the crisis
lows.
we're facing
We are
today,
talking about
you
a
need to
policy rate of
understand the
just
series of decisions that led us here.
0.25%.
It
This was
early
supposed to
2020,
stimulate the economy
and the
during
world was
lockdowns,
shutting down.
but it had a massive
The
side
pandemic
effect.
had just hit.
Housing
Businesses
prices
were
exploded.
closing. People
Canadians
were losing their
flush
jobs.
with cheap money
and there was
desperate
genuine
to lock
fear
in what
that
they
the
thought
entire
were
global
once in a
economy
lifetime
was about
rates
to collapse.
flooded into the
Central
housing
banks
market.
around the world,
People were buying
including the
homes
Bank of
for
Canada,
hundreds of
did what
thousands of
they
dollars
thought
over
they had to
asking
do.
price.
They slashed
Bidding wars
interest
became
rates
the
to
norm.
historic lows.
First-time buyers
and
stretched
pumped
themselves to the
unprecedented amounts of
absolute
money
limit,
into the financial
taking on
system.
mortgages that
The
consumed
Bank of Canada
enormous
dropped its
percentages of
policy
their
rate
income,
to just
all because the monthly
0.25%,
payments seemed
essentially
manageable
as
at those
close to
rock-bottom
zero
rates.
as you can get
Here
without
is what
going
most
negative.
people did not fully
At
appreciate
the time,
at the
it seemed like the right move.
In Canada,
the goal
unlike
was
in the
to
United
keep money
States,
flowing,
where
to
30-year
prevent a
fixed
depression,
mortgages are common,
to give people and
the vast
businesses the
majority of
lifeline they needed
homeowners
to
have
survive.
mortgages that renew
But here's where
every
things got
5 years or
complicated.
less.
When you
When
make
you sign
borrowing
that
money
mortgage in
almost
2020
free,
or 2021,
people borrow money.
you
A
locked
lot
in
of
a
it.
rate around
And
2%
in Canada, where
or even
homeownership
lower.
has always been
But
seen
that
as
lock
the
only
ultimate
lasted
financial
a few
goal,
years, and
where
now
owning a
those
house is
renewals are
practically
coming due
woven into our
at
national
rates that are
identity.
more than
That
double,
cheap money went
sometimes
straight
triple
into real estate.
what people were
Suddenly,
originally
people
paying.
who never thought they could
The
afford a
numbers
home
tell a devastating
were getting
story.
approved for
According to
mortgages.
data from the Canada Mortgage
People who
and Housing
already owned
Corporation
homes
and various financial
were upgrading to
institutions,
bigger ones.
approximately
Investors were
1.2
buying
million
second, third,
mortgages
fourth
are set to
properties
renew
because the
in
numbers just made too
2025
much
alone.
sense to ignore.
Another massive wave will
House
hit in
prices in
2026.
cities like Toronto,
The Bank of
Vancouver,
Canada's own
and
estimates
even
suggest
smaller
that
markets that
homeowners
had been
renewing
relatively
this year
affordable
could see their
began
monthly
climbing
payments
at rates
increase
nobody
by
had
anywhere
ever
from
seen
30
before.
to 60%
In
on
some
average.
areas, prices
For a
jumped
family
30,
paying $2,500 a
even
month,
50%
that could mean
in just
an
2
extra
years.
$750
Now
to
here's the
$1,500
critical detail that
suddenly
most people
needed
didn't
every
think about
single
at the
month,
time.
with no
When you buy
corresponding
a house in
increase
Canada,
income to
most
cover
people
it.
don't lock in
Let
their
me paint a
interest
picture
rate for the
of
entire
what this
life
looks
of
like
their
in
mortgage.
real terms.
The
Take
most
a
common
hypothetical
mortgage
couple
term is
in the
5
greater
years,
Toronto
meaning
area.
after 5
They
years,
bought a
you
home
have
in
to
early
renew your
2021
mortgage
for
at whatever the current
$800,000,
interest
which
rates
at the
happen to
time
be.
felt like they were
Some
getting
people
a deal
chose
compared
variable
to
rate
the
mortgages,
insanity
where the
around
rate
them.
fluctuates with
They
the
put
Bank
down
of Canada's policy rate.
$160,000.
Others
borrowing
chose
$640,000,
fixed rates, but still only locked in for 5 years.
Variable
At
rate,
the time,
their
with
monthly
rates so
payment
low and
was
everyone
around
assuming they would stay low
$2,300.
for a long
It was
time,
tight,
this seemed
but
perfectly
manageable
reasonable.
with their combined income.
The Bank of Canada itself was telling people that rates would remain remain low for an extended period.
In 2025,
people trusted that guidance.
That
They
same
made the
mortgage
biggest
at current
financial
rates is now
decisions of their
costing them
lives
over
based on it.
$3,800
Then
per
came
month.
2022,
That is
and
an
everything
extra
changed.
$1,500
Inflation, which had
disappearing
been
from their
dormant for
budget every
years,
30 days.
suddenly
Their income
exploded.
has not gone up
Supply
anywhere
chain
close to that
disruptions from the
amount.
pandemic,
Suddenly,
the war in Ukraine
childcare,
driving
car
up energy
payments,
and food
groceries, and
prices,
saving for
massive
retirement
government spending,
are
all of
all
it combined to
competing for
push
money that
inflation to
simply does
levels
not
Canada
exist
hadn't seen
anymore.
in 4 decades.
This is not
the Bank of
financial
Canada,
mismanagement.
which has a mandate
These
to
are
keep
responsible
inflation around
people who
2%,
followed all the rules,
watched in
who did
horror
what
as it
society
climbed to
told them
nearly
to do.
8%.
Buy
They
a
had no
home,
choice but to
build
act,
equity,
and they acted
create
aggressively.
stability for your
Over the course of
family.
about
And
18
now
months,
they
the
are
Bank
being
of Canada
crushed by
raised
forces
its policy
completely
rate from that
outside their
pandemic
control.
low of
The pressure on the Bank of
0.25%
Canada
all
is
the
coming
way
from
up to
multiple
5%.
directions simultaneously.
It was the
and it is
fastest and
intensifying by the
steepest
week.
rate hiking cycle
On
in
one
the bank's
side,
history.
you have the federal
And
government
suddenly,
acutely
all
aware
those
that an
mortgages
election
that
is on the
people had
horizon,
taken out
and
when
that
rates were
millions
nearly
of
zero
stressed
were
homeowners
looking
make
very,
for
very different.
unhappy
Let me
voters.
give you some real numbers so you can
Finance
understand the
officials
scale
have been quietly
of what we're
signaling
talking
that they
about.
would welcome
Consider
more
a family that
aggressive
bought a
rate
home in
cuts to provide
2021
relief.
for $800,000.
On the other
They
side,
put down
you have
10%,
inflation that
so their
remains
mortgage was
stubbornly above the 2% target in
$720,000
several categories,
at an interest rate of
particularly services
1.8%,
and
which was
food.
absolutely
The Bank of
available at the
Canada's
time.
mandate
Their
is
monthly
price
payment
stability,
on a
and
25-year
cutting rates too
amortization was
quickly
around
risks reigniting the inflationary
$2,950.
pressures that
That
caused
was a
this mess in the
stretch for a
first place.
family earning
Then
maybe
there is the housing market
$140,000
itself,
a year,
which
but it was
presents a
manageable.
bizarre paradox.
They could pay their
Despite
mortgage,
the affordability
cover their
crisis,
bills,
home
save a
prices
little
in
for
many Canadian
retirement,
cities have
and
remained
maybe take
elevated
one vacation
or
a year.
even started
Now fast
climbing
forward to
again
2024
in
or
anticipation of
2025.
rate cuts.
When that
This
mortgage
creates
comes
a
up for
perverse
renewal,
dynamic where the medicine
even if
intended
rates
to
have
help
come down
existing
slightly
homeowners
from their
could
peak,
make it even harder for
they're
the next
still
generation
renewing
to
at
enter the
something
market
like 4.5
at all.
or 5%.
Governor Tiff
That same
Macklem
mortgage
has found
now
himself
costs them
in an
around
impossible position.
$4,200 a month.
Every public
That's an
statement
increase
is
of over
scrutinized for
$1,200
hints
every
about
single
future
month.
rate decisions.
Nearly
When he suggests
$15,000 more
patience,
per year.
homeowners
For a
struggling
family
with
that was
renewals
already
feel
stretching to make
abandoned.
ends meet, that's
When he
not an
hints at
adjustment.
cuts,
That's a
critics
financial
accuse him of
catastrophe.
bowing to political
And this
pressure
isn't just affecting
and
a few
risking
unlucky
long-term
families who bought
economic
at the wrong
stability.
time. The
The
scale of this
reality is
problem
that
is almost
the Bank of
incomprehensible.
Canada spent
According
years
to data
keeping
from the
rates too
Canada
low for too
Mortgage and
long,
Housing
which inflated
Corporation
a
and the
housing
Bank
bubble,
of Canada
then raised
itself,
rates too quickly,
approximately
trying to
4.5
correct
million
course,
mortgages
and now
are set to
faces the
renew between
consequences of
now
both
and the end of
decisions
2026.
simultaneously.
That represents
What makes
roughly
this moment different from
60% of
previous
all
real estate
outstanding
corrections is the
mortgages
sheer
in the country.
scale of household
These
debt
aren't
involved.
abstract numbers
Canadian
on a
household
spreadsheet.
debt has reached
These are
truly
real
staggering
families,
levels.
real people
The
who are
debt
about
to
to face
disposable
payment
income ratio
shock
sits at over
that many of them
180%,
simply cannot absorb.
meaning Canadians
The Bank
owe
of Canada has
$1.80
estimated
for
that
every
households
dollar of
renewing in
disposable income they
2025
earn.
will see
This is
their
among the
payments
highest
increase
ratios
by
in
an
the
average
developed
of
world.
30 to 40%.
When you combine this debt burden
For
with
some,
rising
especially those
unemployment
who
in
bought at the
several
peak of the
sectors
market
and
with
the end of
variable rate
pandemic
mortgages
savings buffers,
that saw their
you have a recipe
amortizations
for
extend
widespread
dramatically,
financial
the
distress.
increases will be
The stress
even more
tests
severe.
that were supposed to
Now,
protect
you might be thinking, well, if rates have started to come down, isn't the worst over?
While the office
And this
of
is
the
where we need to talk
Superintendent of
about
Financial
what the Bank of
Institutions
Canada
requires
is
lenders to
actually
qualify
doing and
borrowers
why it
at
might
higher
not be
rates
enough.
than they
Yes, the
actually
Bank of
receive.
Canada has begun
These
cutting
tests
rates.
were
After holding at
calibrated for a
5% for
different
nearly
era.
a year, they started
They did not
reducing the
fully
policy
account
rate
for
in
the combination of
mid-2024, and as
record-high
of now,
home
they've cut it
prices,
several times.
rate increases
But
of
here's
over
the crucial
400 basis
thing to
points in
understand.
a short period.
Even with these cuts,
and the
rates
erosion
are
of
still
purchasing
dramatically
power from
higher
general
than they were
inflation
when
eating
most of
into
these
household
mortgages
budgets.
were originally taken
I want
out.
to be clear
The
about
policy
something
rate might be
important
down to
here.
3
This
or
is not just a
3.5%
Toronto
now.
and Vancouver
But
problem
mortgage
anymore.
rates are still
the mortgage
in the 4 to
squeeze is
5%
hitting communities
range
across the
for
country.
most
in
products.
Calgary, Edmonton,
That's still 2
Ottawa,
to 3 times
Montreal,
higher than
Halifax, and
what
smaller
people were
cities
paying
and
just a
towns
few
that
years
saw their
ago.
own housing booms
The damage
during the
has already
pandemic
been
years.
done.
Families
and
are
the rate
facing
cuts
the
we've
same
seen so far are like putting
the
a small
geographic
bandage
spread of
on
this
a deep
crisis
wound.
is what makes
It
it
might
a
slow
national
the bleeding,
emergency
but it's not going to
rather
heal
than
the
a
injury.
regional concern.
The
Bank
mental
of
health
Canada is
implications
caught
are
in
also
an
severe
impossible
and underreported.
position, and this is really the
Financial
heart of the
stress
crisis.
is one of the leading
On
causes
one hand,
of anxiety,
they know
depression,
that
and
high interest
relationship
rates are
breakdown.
crushing Canadian
Counseling
households.
services and
They
debt
see the
help
data
lines
on
are
mortgage
reporting significant
delinquencies
increases
starting
in
to
calls
tick
from
up.
homeowners who
They
feel
see
trapped.
consumer
Some
spending
describe
falling
it as being
as
unable
people
to sell because they
redirect
would
every
lose
spare
everything.
dollar toward
Unable
their
to
housing
stay
costs.
because they cannot
They
afford
see the
payments
economy
and
slowing,
unable to see any
unemployment
path
rising,
forward.
and all
This
the
is
warning
human
signs
cost
of a
behind the
potential recession.
statistics,
On
and
the
it
other hand,
deserves to be part of this
inflation, while
conversation.
lower than its peak,
So what
is
options
still
does the
not
Bank of
fully
Canada
under
actually
control.
have? The
Core
most obvious
inflation
lever
remains
is
sticky,
continued
and there
interest
are
rate
persistent
cuts.
price
The central
pressures
bank
in
has already
housing,
begun
food,
cutting
and
rates,
services that
but the
just
question
won't
is
go
how
away.
far and
If
how
they cut
fast
rates
they
too
can
quickly
go.
or too
Each
aggressively,
cut of 25
they
basis
risk
points provides some
reigniting
relief.
inflation
But
and
the
undoing
cumulative
all the
effect takes
painful
time to work
progress
through
that's
the
been
system
made.
as
But if they
mortgages
don't cut
gradually
fast
come up
enough,
for
they risk
renewal.
pushing the
A
economy
homeowner renewing
into
today
a
is
deep
still
recession
facing rates far
and
above
causing
what they
a
had
wave
before,
of mortgage
even with the
defaults
recent cuts.
that could
There have been
destabilize
calls
the
for more
entire
creative
financial
solutions.
system.
Some
There's no
economists
good option
suggest
here,
allowing longer
only
amortization
bad
periods
and
for
worse.
renewals.
And here's what
Payments
makes
over
this
30 or
situation
even 40
truly
years to
unprecedented.
reduce monthly costs.
Canadian households
Though
are
this
more
comes with the
indebted than
trade-off
almost
of
any other
paying
population in the
significantly more
developed
interest
world.
over
The
the life of
ratio
the
of the
loan.
household debt to disposable
Others have
income in
proposed
Canada is over
temporary interest relief programs
180%.
funded by
That
the
means
government.
for every dollar
Though
of
the
income
fiscal
a Canadian
cost would be
household
enormous,
brings in after
given the number
taxes,
of
they
affected
owe
households.
$1.80 in
Some
debt.
analysts argue
Most of
that
that
the only
debt
real
is mortgage
solution
debt.
is a significant
Compare that to the
correction
United
in home
States,
prices
where
themselves.
that ratio is
If
around
mortgage
100%,
payments become unmanageable
or
for
Germany,
enough people,
where it's around
some will be
90%.
forced to sell.
Canadians have piled into real estate and taken on debt levels that leave absolutely no margin for error.
The problem
when times
with
are
this
good and
approach
rates
is
are
that
low,
it involves
that debt is
massive
manageable.
pain for
But when
current
rates
homeowners
spike and
who
incomes
could find
don't keep
themselves
pace,
underwater,
the entire
owing more on
structure
their
becomes
mortgages
incredibly
than their homes
fragile.
are worth.
And that
The
fragility
banks
is now
themselves are also
being
facing pressure and
exposed.
scrutiny.
The stress
Canada's
is showing
major
up
lenders
everywhere
hold
you
enormous
look.
mortgage
Food bank
portfolios.
usage across
And while they
Canada
have
has hit
substantial
record
capital
highs,
buffers, a
with many
significant
food banks
increase in
reporting that for the
defaults would
first
affect
time,
their earnings
a
and
significant
potentially their
portion of their
willingness to
clients
lend.
are homeowners.
So far, arrears
people
rates have
with
ticked
jobs
up,
and
but
mortgages
remain relatively
who simply
contained by
can't
historical
make the math
standards.
work anymore.
The question is
after
whether
paying
this
their
reflects
housing
genuine
costs.
resilience
Consumer
or just the beginning of a
insolvencies
wave
have been
that is
rising
not fully
steadily,
hit yet.
with the Office
There
of
are
the
some signs of
Superintendent
stress
of
that
Bankruptcy
warrant close
reporting
attention.
increases
The
of
insolvency
20 to
numbers have been rising
30%
steadily.
year over
Both
year
consumer
in many
proposals and
provinces.
bankruptcies have
Credit
increased
card
compared to
delinquencies are
pre-pandemic
up.
levels.
Auto loan
delinquencies
delinquencies
are up.
The
Credit
savings
card
that Canadians
balances are climbing,
accumulated during
and the
the
use of
pandemic,
home equity
when there was
lines of
nowhere
credit
to
to
spend
cover
money and
everyday
government support
expenses
was flowing
suggests
freely,
that many
has been
households are
almost
using their
entirely
housing wealth
depleted.
as an
The
ATM
cushion is gone.
to
For
bridge cash
millions
flow
of families,
gaps.
there
This
is
cannot
literally
continue
no room
indefinitely.
left to cut.
The international
They've
context
already
matters
canceled
here
vacations,
too.
dropped
Canada
streaming
is not
services,
alone in
reduced
dealing with the
grocery
aftermath
spending,
of
and
pandemic-era
delayed vehicle
monetary
repairs.
policy.
There's
But
nothing
our
left to
exposure is
sacrifice except the
particularly
house
acute
itself.
because of the
Now
structure
let's
of
talk
our
about
mortgage
what happens
market.
if this
The
situation isn't
concentration of
resolved,
household wealth
because
in
the
real
potential
estate
consequences
and the extent
extend
to which
far
our
beyond the
economy has
families
become
directly
dependent
affected.
on housing
Real
related
estate in Canada
activity.
isn't just a housing
From
market.
real estate
It's a
transactions
cornerstone
to
of the entire
construction to
economy.
renovation spending
Residential
to mortgage
real
brokerage,
estate and related
an enormous
activities account
percentage
for
of
nearly
Canadian economic
15%
activity
of Canada's
is tied
GDP.
to housing remaining
When
expensive
people can't afford
and
their mortgages,
financing
when they're
remaining
forced to sell
available.
their homes,
What
when
should
new buyers are
individual
locked out of the
homeowners
market
do
by high
in
rates,
this
the
environment?
ripple effects are enormous.
First, if your renewal is
Construction
coming up, start
slows,
preparing now.
which means job
Talk to
losses
your
in one of
lender
the
about
country's
options.
largest employment
Explore
sectors.
whether refinancing
Renovation
with a
spending
different
drops,
institution
hitting
might offer
contractors,
better terms,
suppliers,
and build
and
up
home
whatever
improvement
cash buffer you
retailers.
can
to
Consumer
absorb the
spending
payment
on
shock.
everything from furniture to
If you are
appliances
already
to
struggling,
landscaping
reach out to
falls off a
nonprofit
cliff.
credit
The
counseling
wealth effect
services
goes into
before the
reverse.
situation becomes
As people
critical.
see the value of their
There
biggest
are
asset
often more
declining,
options
they
than
feel
people
poorer
realize,
and
but they are
spend less.
easier to access
And all of
before
this
you fall
creates a
seriously
negative
behind.
feedback loop that can be
If you are
very hard
considering
to
buying in this market,
escape.
be extremely
There's also the
conservative in your
potential for
assumptions.
more severe
Run the
financial
numbers at
system
higher
stress.
rates than you might
Canadian
get today,
banks are
not
heavily
lower.
exposed to
Build-in
residential
cushion
mortgages.
for rising
It's their
property
bread and butter.
taxes, condo
While
fees,
our banks are
maintenance
well
costs,
capitalized and
all the
generally
other
considered
expenses that
stable,
come with
they're
home
not
ownership.
immune to a wave
The
of
worst
defaults.
financial position
If
is to be
mortgage
house-rich and
delinquencies
cash
rise
poor,
significantly,
unable to enjoy
banks would
your
face
life because
higher
every
losses,
dollar goes
which
to
would make
servicing
them
the
more
mortgage.
cautious about
Looking ahead
lending,
at what
which
the
would
next
further
12 to
slow the
18
economy,
months
which
might
would
bring.
cause more
There are
defaults.
several
This is the
scenarios
kind
worth
of vicious
considering.
cycle that
In the
keeps
most
central
optimistic
bankers up
case,
at night.
inflation
And while
continues
Canada's
cooling,
mortgage
the Bank of
insurance
Canada
system
cuts
through
rates more aggressively.
CMHC
The
and
economy
private
achieves a
insurers
soft
provide
landing,
some
and
protection.
most
That
households
protection
successfully
has
navigate
limits
their
and comes with
renewals
its
with
own
tighter
costs.
budgets.
The
But
human
without
toll is something that
catastrophic
often gets
outcome.
lost in
The
discussions of
housing
interest
market
rates and
stabilizes at
economic
current
indicators,
levels, and
but
we
it's the most
gradually
important
work our
part of
way
this
out of
story.
this situation
Mental
over
health
several
crises
years.
related to financial
In a more
stress are
pessimistic
surging.
scenario, inflation
Counselors
proves
and
stickier than
therapists
expected.
across the
Rate
country
cuts are
report
slower
being
and smaller than
overwhelmed
hoped.
with clients dealing with
Unemployment
anxiety
rises
and
more
depression tied
significantly
to
as
housing
businesses
costs
pull
and
back.
debt.
And a meaningful
Marriages
percentage of
are
homeowners
straining under the
find
pressure.
themselves unable
Parents are
to
lying
sustain
awake
their
at night,
payments.
unable to
This would
sleep,
lead to
wondering
forced
how they're
sales,
going to
price
explain to their
declines,
kids that they
negative
might
equity
have to
situations,
move, might have
and
to
a broader
change
economic
schools,
downturn
might have
that
to give
feeds
up
on
the
itself.
life they thought they'd
The
have.
most likely outcome
There's a
probably
quiet
falls somewhere between these
desperation spreading
extremes,
through
with
Canadian
significant pain
suburbs
for
and
many
cities
households,
alike,
but
a
not
feeling of being
systemic
trapped
collapse.
by circumstances
The
that
question
weren't
is how
supposed to
that
happen,
pain gets
that nobody
distributed.
warned them
Will it
about
fall
clearly
primarily
enough,
on those
that
who bought
nobody
at the
in
peak of the
power
market,
seems to
on
know
particular
how to
regions
fix.
or
The
property
policy
types,
responses
on
so far
specific
have been largely
demographics like younger
inadequate.
first-time
The federal
buyers
government
who
has
stretched
introduced
furthest
some
to enter the
measures like
market.
allowing
What
extended
is clear is that the
amortizations
Bank of
for
Canada
renewals
faces a reckoning
and
for
some
the
relief
policies
for
of the
insured
past
mortgage
several
holders.
years.
But
The
these
decision
are
to keep rates
band-aids
at
on a
emergency
broken
levels
system.
long after the
Extended
emergency
amortizations
passed.
might
The
lower
tolerance for
monthly
runaway
payments,
asset
but
price
they also
inflation,
mean
the
paying
apparent
more
assumption
interest
that a
over
soft
time
landing was
and taking
guaranteed
longer to
rather
actually
than
own
hoped
your
for.
home.
All of these choices
It's robbing
have
Peter to pay
consequences.
Paul.
Those
There have been calls
consequences are
for
now
more
landing on
aggressive
the
action,
doorsteps of
things like
millions of
mortgage
Canadian
interest
families.
relief programs,
The political
emergency
fallout is
rate
already
caps,
becoming
or even
apparent.
government-backed
Housing
refinancing
affordability has
options.
become one of the
But
top
all of
issues
these
for
come with their
voters
own costs
across
and
the political
complications.
spectrum.
And so far,
Governments
there's
at
been
federal
limited
and
appetite
provincial
for
levels
truly
are
transformative
scrambling to
intervention.
appear
The Bank of
responsive,
Canada, for its
announcing
part,
programs
continues
for
to
first-time
insist that
buyers,
it's data-dependent,
cracking down on
that it will
short-term
respond
rentals,
appropriately
and
to
promising
changing
to
conditions.
increase supply.
But there's a growing
But
sense
none
that
of
the
these
bank
measures
is fighting the
address the
last
immediate
war,
problem
still
facing
so
existing
scarred by the
homeowners
inflation
with
experience
mortgages
that it's
resetting
reluctant to
to
move with the
unaffordable
urgency that the
There
current
is an
situation
uncomfortable
demands.
conversation that
Some
Canada needs to
economists
have
argue that the
about
bank should
whether
be cutting
housing
rates
is primarily
much faster,
a commodity
that
and
the
investment
inflation battle
vehicle,
is largely
or whether
won,
it is
and
fundamentally
the bigger
shelter,
risk now
a basic
is economic
human need
collapse
that should be
Others
accessible
counter
to
that
working
moving too
families.
fast would undermine
The policy
the bank's
choices
credibility
of the past 20 years
and
have
potentially allow
increasingly treated
inflation to
housing as the
return.
former.
It's a
with
debate that
homeownership
plays out in
framed as the
academic
primary
journals
wealth-building
and policy
strategy for
circles.
middle-class
But
Canadians.
for families,
that
staring at their
strategy
mortgage
has now
renewal
collided
letters,
with the
it's
reality
not
that
an
investments
abstract
can go down
discussion. It's
as well as
their
up,
lives,
and that
their
leverage
futures, their
amplifies
homes
both
on
gains
the
and
line.
losses.
What
For
happens
younger
next is
Canadians who have been
genuinely
priced
uncertain.
out of the market entirely.
There are a few
There
possible
might
scenarios.
be a temptation
In the
to
best
view
case, the
struggles
Bank of Canada
existing
continues to
homeowners
cut
without
rates
sympathy.
gradually. Inflation
After all,
stays
those
under control,
homeowners
and the
benefited
economy
from
manages
price
a soft
appreciation
landing.
that locked
Some
younger
families
people
will
out.
struggle, some will
But
lose
this
their
kind of
homes, but the
generational
overall
resentment
system
serves
holds.
nobody.
House
The
prices might
reality is that
stagnate
both
or
groups are
decline
victims of
modestly,
policy
but there's
failures
no
that
crash, no
prioritize
crisis,
short-term
just a
political
painful
convenience
adjustment.
over long-term
In a worse
economic
scenario,
stability.
the economic
The coming
slowdown
months will be
accelerates,
critical in
unemployment
determining how
rises
this story
significantly,
unfolds.
and the
Every
mortgage
Bank of
renewal
Canada
wave
rate
triggers a
decision,
cascade
every
of
employment
defaults.
report, every
House
inflation
prices
reading
fall
will be
substantially,
scrutinized
negative
for
equity
signals about
becomes
what comes
widespread,
next.
and the banking
Homeowners
system
approaching
faces
renewals will be
real
watching and waiting,
stress.
hoping for
This would be
relief
Canada's
while fearing
version of the
worst.
2008 U.S. housing
Policymakers
crisis,
will be trying to
perhaps
thread
not
an
as severe,
impossible needle,
but deeply
balancing
painful
competing
nonetheless.
priorities while
There's also a
managing
middle
public
path where the
expectations.
government and
What
central
we are
bank
witnessing
manage
is
to
the end
thread
of
the
an
needle
era
with a
in
combination
Canadian
of
real
rate
estate
cuts
and
and
monetary
targeted relief
policy.
measures,
The cheap
but
money
this
that
requires
fueled decades
policy
of ever-rising
coordination
prices
and
is not coming
execution
back.
that
At
hasn't
least
been
not
evident
to the levels
so far.
we saw during the
The
pandemic.
frustrating thing is that
The
much of
adjustment
this
to
was
new reality
predictable.
will be painful,
Economists and
and it will
housing
reshape
analysts
the
were
Canadian
warning
economy
years
in ways
ago
we
that
are only
Canada's
beginning
housing
to
market was
understand.
overheated,
If
that
there is a
household
lesson
debt
in
levels
all of
were
this, it might
unsustainable,
be about
that the
danger of
combination of
assuming that
low
conditions
rates
will
and high
remain stable
prices
forever.
was
The
creating
homeowners now
enormous
facing payment
vulnerability.
shock were not
But
irrational
those
when they
warnings
bought.
were largely
They were responding to
ignored by
incentives
policymakers
created
who
by
were
policy.
enjoying the short-term
problem is that
benefits of
those
a booming
policies
real
were not
estate market,
sustainable,
and
the
by
bill is
home
now
buyers who
coming
were told
due.
that real estate only
For the
goes
Bank of
up,
Canada, the
that
mortgage
renting
reality
is throwing
check is
money
a reminder
away,
that their
that you need to
decisions
get
have
into the
profound
market at
consequences
any
for
cost.
ordinary people.
That narrative,
Rate
which
policy is
benefited
not an
banks,
abstract
real estate
academic
agents,
exercise.
developers,
It determines
and
whether
existing
families
homeowners
can keep their
helped
homes, send their
create
kids to
the
activities,
conditions for the
take
crisis
vacations,
we're now living
or
through.
retire with
And the
dignity.
people paying the price
The weight of
are
that
the families who
responsibility should
believed what
inform
they were
every
told
decision going forward.
and made decisions
I
accordingly.
want to
thank you for taking
So
the
where
time
does
to
this
understand
leave
this
us? It leaves
complex
us at a
and important
crossroads,
issue.
both as a country
The
and as
mortgage
individuals.
situation in
For those
Canada
of you
will continue
watching
to
who
evolve,
are facing mortgage
and I will
renewal
keep
stress,
covering
please
it as
know
new
that you're not
developments
alone,
emerge.
that this is a
If you found this
systemic
video
problem,
informative,
not a
please give it a
personal
thumbs up.
failure. Reach
Your
out to your
likes
bank
and
early,
comments help
explore
more
your
people
options,
discover
talk
this
to a credit
content,
counselor
and
if
they
you
let
need
me
to.
know what topics
There are
matter most to
resources
you.
available, even
Leave a
if they're
comment below,
imperfect.
sharing
For
your
those
own
of you who haven't
experience with
yet
mortgage
been
renewals,
affected, this
or
is a
your
reminder
thoughts
to
on
think
what the Bank
carefully
of
about
Canada
debt,
should
about
do
risk,
next.
about
I
the
read every
assumptions we
comment,
make
and your
when making
perspectives
major
genuinely
financial
shape the
decisions.
content
And for
I
all of us,
create.
this is
And
a
if
moment
you have
to
not
demand
already,
better
please
from our
subscribe
policymakers,
to the
from our
channel.
central bank, from
We
our
are
government.
building a community
The
of
decisions
financially
made in
informed
Ottawa
Canadians
over the next
who
year
want
will
to
determine
understand
whether
the
this
forces
crisis
shaping
is
our economy
managed or
and
whether
our
it spirals.
lives.
Your
Hit that
voice
subscribe button,
matters.
turn on
The story of
notifications,
Canadian housing
and I
has
will see
always
you in
been
the
one of
next
dreams,
video.
of
Take care
families
of
working
yourselves
hard
and
to
your
own a
families out
piece of
there.
this country.